It is time now for Trading Nation. Traders do trade better together, and today let's trade the bank stock, sliding today after a big post-election bounce. Eddy Elfenbein, editor of the Crossing Wall Street blog, and Craig Johnson, technician with Piper Jaffray, are your guests. Eddy, what do you make? Banks had a big run. I mean, many of these stocks up 30, 40% in a matter of a week or two. Did they get overbought too fast? Are they ready for another fall or a rebound and a move higher?
I think we're really at the end of sort of this part of the post-election move. Like you said, this has been a tremendous rally for bank stocks. I mean, the sector just doesn't normally act like that. We had, as in 4 days, the S&P Bank Index went up 14%, and stocks like Goldman Sachs added, I think, $11 billion in market cap. This is for a candidate that the bank really didn't think much of. I think that was a change in sentiment. Going forward, I don't think we can sort of count on the rally going forward, because all the things that those are predicated on, say a loosening of regulations, affecting Dodd-Frank, talking about bringing back Glass-Steagall, that really remains to be seen. We're going to have to find out what the Trump agenda is, how Congress feels about this, how the Democrats, if they want to put up a fight about that. So the short term, the sentiment rally, that ended on Monday. Going forward, I think we're just in another aspect, another part of the cycle of where bank stocks look.
Okay, Craig, I've got a super complicated multi-part question for you right now. Are bank stocks going higher or lower?
Short term, they're going to pull back a little bit, but the longer term, I think there's still more room to go. This is a big change for the financial sector. We're shifting from a monetary-based policy to a fiscal-based policy, and at the same point in time, we are also starting to see the reflation trade coming back on. So while banks may have gotten a little bit ahead of themselves, look at this long-term chart we brought today. You can see that you made kind of the classic bottoming setup. You broke out. Typically, when you see this happen, look for the bank shares to back up, retest, maybe come back to about $21 on the XLF. But a measured objective for me, say 6 months out, 9 months out, would be closer to 25. So I'd be buying any pullbacks, Brian.
Buying any pullbacks. There you go. Craig and Eddy, thank you both very much. For more Trading Nation, head to our website, tradingnation.cnbc.com.
Overbought and oversold indicators, such as momentum oscillators, are generally used differently depending on whether the stock is range-bound or trending. Look to buy a range-bound market when an oscillator, such as the RSI or stochastic, falls into oversold territory and then moves back above it. And look to sell a range-bound market when the oscillator rises into overbought territory and then drops below it.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.